let's get into this, shall we? Let's get into this. Pop in this Discord real quick before I forget, as the people flood in. Woo! So, Bitcoin ETF, huh? Put a little light on the situation in here. Interesting indeed. So it's got everybody scared now. Not knowing exactly what Bitcoin's going to do. Folks, it's called geometric Brownian motion. Doesn't matter what asset it is. All right, this market is random most of the time. Don't care what market is. Random most of the time. So Bitcoin going to make a bull run. Bitcoin's been on a bull run since day one. Day one. Let's take a peek here. Got going on. Already tested first standard deviation to the downside. Beautiful end of the day little pump off the 1SD to the downside. Now I came into the Discord midday, and I was talking about, I did a workflow. I saw BTC was going to run to the first standard deviation, right? It was right around in here, right? Right around in here. Let me see exactly what time. Yeah, it was. It was right around here when it got up above the top side of this daily volatility range right here. So BTC dumps it out to the 1SD, right? Algos from the top side of the 68.3 Laplace distribution range. 1 15-minute candle. Run it down through the 1SD. Pulls up. A few more wicks down in that area. Then it pumps it up where to? Right before the close at the end of the day. It runs up to the first standard deviation. Comes back. Closes right at the top side of the 68.3 Laplace. Beautiful. Saw it happening. Just had a little pullback first. Let's see here. Today, 1SD to the downside, already above the 68.3 Laplace to the top side, heading to the first standard deviation. Well, how do you know that? Well, because I know how to read charts. That's a start. Let me see here. Go over. Whoop. There we go. Get these set up right. There we go. Let's look at BTC. We're going to start on the daily. All right. Oh, of course. Little hidden bull. Let me see here. I'm talking about previous days. We've already been through this. Just running through my mind here. Speaking out loud, dropping into trend again on the daily. Love to see that. Now, and remember, wave trend has been tested, and this thing's above the power mean band. You got 2 log MAs. Variance is rising. Log returns above the mean. There's the 95 for Laplace I was talking about on the daily candle, about 48.8. Guys, that's like $1,300. Good stuff. Chop down this 4 hour real quick. Let's take a peek. Yeah, there was a lot of hidden bull, man. There was a lot of hidden bull divergence. Popped it up, got the returns oscillator above the zero mean. Now the DLP is building, starting to drop into trend again. Let's see, volatility expanding. I'll tell you what, low length is contracting a little bit right now in the 4 hour, positively correlated. The other two are expanding, positively correlated. That's what you want to see. Variance is turned up, positively correlated. We're going to get an outlier like we did over here, right? Last daily outlier to the top side anyway. See, took BTC from about 43.3 up to about 47. Beautiful. That's going to put us over 50K, guys, if it does the same thing. See what happens. Look at these beautiful outliers. What is an outlier? Outlier is a fat tail event within the distribution. What is this indicator here? Coefficient of variation. Guys, it's just variance. Purest form of volatility, right? It's absolutely incredible indicator. And what we've done with this, nobody else is even touching it, right? Nobody else is even touching it. In my opinion, this is one of our best indicators, right? To just get a good read on the market. What is it doing? The variance is going to tell you everything. Throwing a little entropy and some divergence between price action and returns. What's the DLP doing? Got one hell of an edge here. And the 4 hour looks pretty damn good. Got to bounce off the zero mean. Let me see something here. Now I got music in my head. And here, as soon as you got the cross too. So look at the returns oscillator. It was going up. As soon as you got the cross, guys, use the zero mean with divergence. Did it play out? Absolutely. Then you got a little clear out on that 4 hour, right? Whoop, whoop. Gotta love it. Boy, oh boy, these shorts are going to get wrecked. Yeah, they're falling off today. A bunch of them got crushed yesterday. We talked about it. Let me pull it up real quick. Why? Why are people getting liquidated? Pretty simple. Leverage. Leverage. That is the reason. Let's see. Yeah, look at those shorts. Last 24 hours, about $167 million in shorts. Longs, 103 million. Dude, guys, total 270 million in traders or has been liquidated in the crypto markets. Pretty powerful, man. Wow. Stop using that leverage. Stop using that leverage. Pull that off now. Get back over here. 90 minute. Having an outlier on the 90 minute. That's what I wanted to see. Beautiful. Starting a trend on the 90 minute too. What's that 4-hour entropy doing? Yeah, dropping in trend. So 90 minutes in full trend right now. 45 minute trending right at the 2 SD band 2. Bouncing off the zero mean. DLP's building. Volatility. Let's see here. 981 expanding positively correlated. 2400 contracting negative. Agreeing right there. You're getting a little bit of expansion on the low length volatility. The correlation just broke negative. Just broke negative. Let me see. That could have been the reason why we first got this pullback here. And the other two lengths are just ripping this thing up. What's it at now? 47.7. All right. Remember what I said about a target already. Let's see. Jump down this 33. Came out of trend a little bit, dropped right back into it. Now look at the volatility on the 33 minute. Now, if you're just watching this, you're probably going to look at this indicator and be like, okay, I see it. Have no clue what is going on, but yeah, it's all good. Volatility expansion positively correlated. Data sets are going to move to the top every time. Hello, guys in the chat. I see you. I see ya. Okay, let me see here. Any questions you guys have, ask them in the chat. Be more than happy to answer them. Let's see. So 33 minute. Everything's looking good here, guys. You see this 15 minute. And there was a little discussion in the chat earlier in the Discord, not really a discussion, but somebody just made a point. BTC, definitely bullish, but it's going to be messy. And I told him, I was like, it's called geometric Brownian motion. And during a bull run, right, during a Bitcoin bull run, the outliers that you're going to have on the 15-minute time frame, right, both directions. This is what geometric Brownian motion is all about. These markets are random most of the time. But when you go in the trend and you're having outliers, guys, it's life-changing. It's life-changing. And I'm strictly going to stick to the 15-minute. I don't care. I don't care about the macro time frames when you're in a bull run, right? Everybody's trying to figure out what BTC is going to do. It's a random market. If you're not trading low time frame volatility, this is why a lot of traders got liquidated on the bull run up to 20K. From $250 to $20,000, a lot of traders got liquidated, right? Why? You're trying to short every freaking local top. It's ridiculous, and BTC just wrecks people. You got to understand what's going on in these markets. What's going on with these high-frequency trading firms. You see, returns oscillator too. We got no hidden bull div at all. Got a little bit of bear setting up. Hidden bear. We do have some bear, though, setting up. Just a little bit from way back. I would imagine that's probably not even there. Not even there. Had to pull back on the div right there. Right, there was all the stabs of bear div. Boom. Pull back. Where'd that pull back from? About 47.5 down to about $800-900 move to the downside. This is what I'm talking about, right? Did you have a little bit of an outlier? Let's see here. To the downside? No, not to the downside, right? Here's the thing, though, is what you got to realize on this 15-minute. When this was setting up bear div, all this hidden bull div was setting up as well. You're seeing the reaction of the market right now, right, with this move. Let me see here. Go over on the RMLRs. Yep, back up above the 30 length RMLR. The 11 length has popped back up above the 33 power mean. Let's see what this future projection looks like. Let me see something. Make sure I got all these turned off. No, that's why I'm seeing that. Boop. Had continuous market override or protection on. It's going to give you a not too good of a read on the future projection, and this thing is looking good. My God. What's that on a daily? Let me look at this weekly real quick one more time. Charging up, huh? We're going to get it this week, 51. Literally $50,900 where the 11 length RMLR is right here. And I've heard some people in more macro time frames seeing the 30 length pretty low. If you turn on your future projection though, guys, it's climbing fast. Here is where the 30 RMLR is going to be at. This is Monday, August 5th, $58,000. Let me see where the top side of the RMLR here is. Hold on, let me scale this down so I can read it. Give me 1 second here. About 64K, almost 64K, 63.9 and some change. Pretty powerful. Got nice points of mean reversion out here on the 30. All right, because this 11, if this market continues to charge up, this 11 is just going to take off. But like I said, you can get a future projection of where this 30 is going to be and where some pull. If you get some of those pullbacks that we get, along with the macro volatility ranges, you are set. Let me see here. Now remember, first standard deviation right around 48K. Right around 48K. Pull this down a little bit. There we go. Yep, there's that weekly. Now I talked about this previous in the week, right? You've got these. Here's the weekly. Here's one of the macro volatility ranges. The monthlies below it gives you good areas to catch wicks, man. Gives you real good areas to catch wicks. When you find confluence between those areas and some RMLRs, you can lock it in. Usually hit it pretty well. Let's see here. Oh, GBTC offline, baby. How you like that little ETF? A lot of ETFs were approved. Let me see here. Unless this is all fake, right? SEC playing with everybody. Like their account really got hacked. Give me a break, man. These people are such goons. I mean, seriously. Let's get real here. Stop watching the news. Watch the data sets. How's that? These people are going to manipulate you. Solana up 4%, huh? Let's look at Solana on the VRE real quick. Beautiful. Back up above the macro ranges. I was talking about Solana yesterday, but what happened? I even talked about it. I was like, look, Solana is dipping down below these macro ranges, right? An hour into the stream yesterday, it comes down, hits the bottom of the monthly volatility range, not the support levels, just the bottom of the center of the range here. Didn't close a candle below it. In fact, grabbed up liquidity, came back down to the, got down to the bottom of the monthly, shot up to the center of the weekly, pulled back to the first standard deviation, and then took off at the end of the day. Was that high yesterday? About 105? Sitting at 106 right now. Love it. Already tested the top side of the monthly, center of the weekly. Got back up above the daily. Here it goes. Guys, this is pretty simple stuff. Oh, here we go. Let's see here. Yeah, could be a big day, my friend. Let me see what this is on here real quick. Ah, boy. What are we using? Fibs? Sorry, brother. We don't use fibs here. Yeah, there's really nothing for me to look at with that. Have I used Fibonacci before? I found the VEPS. Yeah, back in the day. It's been about 7 years we've been cooking on the VEPS, though. Leading information at Alpha Trading, right? Leading information. If you want to look for some areas on pullbacks, you got to be using reverse mean of log returns, right? You got to know where the weekly and the monthly macro volatility ranges are. But just look, I just went through this too. Maybe you weren't in here yet, but these RMLRs are climbing. These are good areas of mean reversion. Because what's this market all about? Do you think it's about retracement on Fibonacci? Or is it mean reversion? It's mean reversion. We've all learned this the hard way over at Alpha Trading. Mean reversion is king, and that's what happens. That's why we did build this indicator, the reverse mean of log returns, and it gives great areas, along with knowing where these macro volatility ranges are at. So here, pull this back up. We scale this down. Most people would look at this indicator and be like, that's a lot of noise. Yeah, it's a lot of good leading information is what it is. You've got intraday, 4-hour, and daily distribution levels, normal distribution and Laplace distribution. Then we've got volatility ranges, daily, weekly, and monthly. Down here, this tight little range right here, the red and yellow lines, that is the weekly volatility range. Here's the monthly. These are good areas of mean reversion along with the RMLR. And then if you go over onto our power mean band, right? This isn't grandma's super guppy. These are all power means. Power means, reverse wave trend, reverse Fisher, 3 log return moving averages. What? So, Alpha Trading, why don't you use exponential and simple moving averages? I'll put it pretty simple. They're lagging indicators. If you're in traditional TA, most likely you know these things, that all this information lags. That's why everything we do is based on log returns. Price action follows returns. That's just how it's set up. That's why we use a returns oscillator for divergence. Right? That's why we use a return oscillator for divergence, because the only real divergence in these markets is between price action and returns. Any other divergence is just lagging information. If you're out there using an RSI, a Stoke, anything like that, there's people using volume, for God's sakes. Do we even know what creates volume? What's the basis of everything? Volatility. That's why you won't find a volume indicator anywhere on any of my charts. It's ridiculous, right? It's a lagging indicator. The volatility creates the volume, right? And so how do you know when that's going to be a sustained move? By having an entropy indicator. There's nothing better to measure trend and randomness than an entropy indicator, and we have it right now. Powerful little indicator. We've got our deviation log pro as well. Got a lot of powerful stuff going on here. But yeah. Now, more likely, I'd be like, let me see something here real quick. Blow this back up. Make sure that's what you were looking at. Yeah, gold. Actually, let me get on gold real quick. I haven't seen you in here before. I talk about gold a lot. Let me get on traditional markets. We'll get back to crypto. Yeah, this is what we do, man. We will cater to you guys, right? You come in the TradingView chat and you ask questions. I'm gonna get after it for you. So here's gold on the VRE. Already looking like it ran to the first standard deviation. Top side rejected, pulled back. Let's see where this thing's at. Taking a minute to populate here. Come on, baby. You're back in the 68.3. Let's see. So gold takes off on the day, gets above. This is the daily volatility range right here. Running 4-hour levels. Let's see. The previous 4-hour ran to the top side of the 4-hour 68.3 Laplace, pulled back, didn't close a candle back inside the daily. And then it runs up to the first standard deviation. Pulls back, sends wicks through the bottom of the daily volatility range. Here we are sitting right at the top again. Let me take a peek here. Here's the problem with gold. On top of it being the one asset you can guarantee is negatively correlated with Dixie. Bitcoin can be positively correlated with Dixie a lot of the times. Actually really can. But when you got gold in the dollar index, yeah, man, the dollar is gaining some strength too. So look out. Now look at the macro volatility ranges on gold. The data set's below both. Here's the weekly and the monthly. And the way this is setting up, you got a monthly range on top, weekly's below it, daily's below both of them. Very bearish setup. That's why you see the algos rejected the first standard deviation and send it tumbling back down to the bottom of the daily volatility range. So you got a little battle going on right now here intraday. You got these bull algos. When I talk about that, I'm talking about the high frequency trading firms. It's the only algos I care about. And that's what we modeled everything we do after that. We want to recognize what these HFT firms are doing. Because if you don't do that, you're going to be lost. If you're swing trading volatility, you're going to get wrecked. That's why we teach trading low time frame volatility. I'll tell you, me for one, on gold, when they bring out these zero DTE options, I'm going to attack it, man. We understand correlation here. We understand the correlation, especially intraday, between Dixie and gold. It's going to be like taking candy from a baby. We'll have to put some of that stuff out live, let you guys see the power of this. But anyway, where do I think gold's going right now? Let me see here. Let's throw gold up on my regular chart. Boop. Let me take one peek here. I'm going to go to the daily. Yikes. That doesn't look good. Let's go up to the daily. All right, yeah, we're down here testing a wave trend. Let me see, is this setting up hidden? Absolutely, from the cross down it is. Setting up some hidden bear divergence right now as we speak. Insane. There was the last wave trend test. Got a wick almost to it there. I think starting to turn around here for gold. Let me see. Did print some bull div here at the bottom though, right? Did print some bull div on the bottom as it's setting up. So this little pop that got back up to, looks like the 9. Yeah, the 9 log MA. Sent a wick up to it. Just setting up hidden bear now. And look at the DLP building, right? Starting to drop in the trend. Not there yet. This is what we use workflows for. Yikes. Okay, so here's the 4 hour. This thing is totally flipped now. You're below the reverse wave trend. If you ever hear me talk about wave trend or Fisher, it's our reverse models. Okay? It's our reverse models. The wave trend, when you load it up like this, very powerful. You can see this last 4 hour candle right to the top side of the power mean band. Right, these aren't moving averages. Again, we've got 3 moving averages, but they're log return moving averages. The band itself are all different lengths of power means. Powerful. So why people are out there using like something like a super guppy that has a bunch of lagging information on it, just a big mess of exponential simple moving averages, however you have it set up. It's not going to give you good reads. Meanwhile, you got log MAs. Look at the wicks into the 99 right here. Perfect touch. Perfect touch. There's a reason why all this works so perfectly. I'm telling you. Because it's leading information, not lagging. What's going on here real quick with the volatility? Tracting positive. Got the 981 expanding negative. And you had a little hidden bear right there. Had a little bit of a higher high. Not much. More weak bear. I don't play weak bear. So let me see here. Let's go down to the 90. Gold's got its work. Now we got a tight power mean band down here now on the 90 minute. Just rejected. That's the Fisher, right? Reverse Fisher on the 90 minute time frame. Back now, you're back down below wave trend. Just sent a wick up in the wave trend, pulled back. This is increasingly looking like, when I see stuff like this going on for gold, I can look up to the dollar and see some strength. What's it up right now? 0.2. Not bad. You see the div here. Yeah, there was the bear div setting up. I mean, look at the data set was still going up. The returns had already turned down. Returns had already turned down. But what did we set up some hidden bull? We did. We set up a little hidden bull. Returns oscillator turned up, got a little pop up to that reverse Fisher, but down again. All right, down again. Let me see here. DLP's trying to break to the downside too. Let me see the 45 minute. Outlier. Is that 90 minute variance having an outlier? It is. So this is just pure variance. That's all this is. And variance is a spread of data from the mean. The mean of what? Log returns. Price action doesn't have a mean, right? Returns mean revert. Price action follows. That's why this information is so powerful. There's the hidden bear right there that's set up on the 45. Beautiful, beautiful, beautiful. So it was coming off hidden bull, right? Hidden bull just comes in and sets up hidden bear. It's easy as that. There's the hidden bull move. Would that pop right on the wave trend too? 20, 30, back up to about 35. Nice little scalp. Then you get a nice wick up and then down on the hidden. And okay, got lower lows on DLP. Save there. Because when you get the same divergence setting up on the DLP too, look out. Look out. At the 33 minute. Yep, lower low. There's no bull div on the bottom at all. Jump all the way down to 15. DLP was breaking to the downside there too. Yeah, lower lows here. Lower lows. Got a really tight power mean band on the 15 here. Everything's coming together. Yikes. Good thing got the Fisher down here at about 2028. You can see the wicks and the wicks that are getting sent through this reverse Fisher. That's only going to hold up so long. Look, starting a trend. 15 minutes starting a trend. See on 33. Yeah. So on the intraday here, low time frame, this thing is definitely starting to trend to the downside. 9 minute was trending to the downside. Pop back up inside the deviation bands. Okay, let's put gold on the RMLRs. Let's give some good reads on where this thing's going to pull back to. So yeah, when I first looked at that chart, not that I'm going to, just dig into the fibs, but I thought it was Bitcoin. That's what I was doing, and I saw the title, Bears Taking Control. I was like, whoa. But yeah, gold, totally agree, man. Totally agree. Bears are going to take control of gold. Let me flip this over here. All right. So you're testing the 30 right now, or send a wick down to it. Here, I got to turn on these projections. So when you're dealing with continuous and non-continuous markets, yeah, we got some override protection. There you are. There we go. There we go. Okay, let's see what's going on here. No, this is not a star chart. And is what I have done here, right? I got 2 different lengths RMLRs, right? We got the data set. This line, that's the 33 power mean. That's the 33 length power mean. And then all the little dots, those are and this is a weekly chart. Those are the weekly distribution levels, Laplace and normal distribution. Weekly though, yeah, you did test the downside. Tell you what though, this is what I'm looking for. This weekly candle. Gold comes down here and closes below about, what have we got, 212? Is that where it's at? Yeah, 212. Close down here below 212. You're probably going to end up at the 33 power mean. And it's going to cross down. That 30 crosses down the 33 out here somewhere as well. That's why we love having the projection into the future here. But the 33 power mean, at least today, 1967. I'm looking more out here probably. You are going to have some RMLR support. So if you break down, if it breaks down this 30 length RMLR, this is what I'm saying. You're probably going to end up at the 33 power mean. This is a weekly though. Let me go to the daily and see where these are at. Not good. This is what I'm talking about, the 33 power mean, right? You're below it right now. Tried to send a wick up, actually got through the first standard deviation, pulled back. Right now you're sitting below the 33 power mean. Why do I just have the 33 power mean on this chart? Because it is very powerful indeed. I used to never give away all this stuff, right? At least how I run all my charts, just the number game I play. But hey, that time's up. That time's up. Time to let everybody know why. And usually when people ask me why I use these random time frames, 1 minute, 3 minute, 6 minute, 9 minute, all right, 33, 45, 90, there's a reason. And most of the times I tell people I'm using them because you're not. Gives me even more of an advantage. I'm using leading information. I'm using time frames most traders aren't using, so I get a better insight on the market. And I found these time frames, the algos love them. It's another reason. So yeah, looking at this daily, this is no good. Tell you what, gold needs to close above 2030 today. This thing could really, really, really drop. Let me see here. See the 4 hour. Expand this a little bit. Yeah, same thing. Now, and this is the ticker too. You got both RMLRs below the 33 power mean. All right, below the 33 power mean. Prediction models flip to the downside too. It's not good. You can see the wick on that 4 hour candle got up above the 3 SD. I'll show you right here. Let me see here. Yep, there's a 3 SD right there. Wow. 1, 2, 1, 2, 1, 2. Hold on here real quick. What is this? Our candle. Gold spot. Yep, just making sure I get these charts aligned. That is showing that this 4-hour candle did move up towards the 99.7 Laplace. We could be getting a data feed error over here. Something's not adding up. So there's the move right there on this 4-hour candle. 1, 2, yeah. No, that's, I mean, the third's up here. It's interesting. That's got to be some sort of error. And you will get them sometimes. You will get data feed errors. That's okay, though. So it got up above the 1 SD in the 4-hour second standard deviation and 95.4 Laplace. I don't know why that's reading like that. That's interesting. Some rando wick. Okay, it's all good. But look, when you got both RMLRs below this 33 power mean, you get a wick like that and pulled back. God, man, what are these RMLRs are? 2026 and 2010. Now, once again, it does give support, right? So you get a little dump here. We could see this thing close inside 2010 today. Let me see something here. Let me take a quick peek at see what Dixie's got up ahead. Oh, getting a nice little stiff rejection here. As gold finds a little relief, right? Popping up a couple points. That's what happens. You can see this in real time. Gold pumps, or dollar pumps, gold dumps. Dollar pulls back, gold pumps. It's the way it is. And where are we right now? Top of, a little bit of top of the weekly range. We're right at the top of the monthly. I'm telling you, the dollar has a lot of support down here. The fact it got down here to the second support from this daily volatility range and just ripped the candle up to the 1 SD perfectly. You see this all the time too, right? All these distribution levels get hit constantly. This is why. Do you think the high frequency trading firm algorithms are using lagging information? Absolutely not. They're using leading information. That's why they are the ones liquidating everybody, especially in the crypto markets. All these people using leverage. God, don't make it that easy on them. Stop using leverage, you guys. I'm telling you, you're going to get wrecked. You see it in real time every day. Tiny little moves. Traders getting liquidated because of leverage. They're being misled. It's one of the biggest scams out there. Leverage. So let's see what happens with the dollar. Because if the dollar can break up above this 1 SD, 102.736, you can see a 95.4 Laplace move to the 103 area. And if we see that, if the dollar finds some strength here, we see that. If the dollar runs up to the 95.4 Laplace, I'll show you exactly where gold's probably going to drop to. There we go. First stop, bottom side of the 68.3, right? 2020. But if it makes that run, you're going to see gold at the first standard deviation first, barely over 2K, $2,005, about 2006. So be prepared for that. And like I said, all this macro volatility above. Dixie's data set is above all that macro volatility. Gold's is below. Bitcoin's is above. There's a lot of cryptos that are above. So yeah, good stuff, man. We're gonna have to let this move out throughout the day, though. But I am looking for if Dixie gets some rocket fuel in the tank and moves up to that 103 area. Go. Gold will dump out. Gold will dump out. Win 0 DTE options. Let's go, man. And this is just gold spot, by the way, too. Pretty sure. What'd you have up? Let me pull this up. What pair did you have? Yeah, the CDF or CFDs, huh? Gotcha. See what you're doing. Oof. So what do you got? You're using? Oh boy, using a couple of my favorites. Yeah. So what do you got? Talking to hit 2010. Yeah, you saw what I have at 2010, right? Actually on gold, yeah, 2010, man. 2010's kind of, it's right here. Kind of no man's land. That's okay. That is okay. I'm going to see what happens with the dollar, really. So that's going to determine what gold's going to do. And yes, it's not gold's going to determine what the dollar's going to do. It's the exact opposite. The dollar will determine what gold will do. Right now, Dixie's pulling back. So, yeah, here comes the dollar. Let's go. And the other side of the coin, if the dollar can get up here and close the daily above 20, like 2041, 2042, that's pretty bullish going into tomorrow. But look, man, you're getting ready. Gold's getting ready to smack its head up here on all this macro volatility. And it does not like it. All right, it will reject. Let me see here. But here's another thing. This weekly range, let me take a peek here. Yep, drop down right from it. Day one, right? Day one. Haven't been able to get, haven't even sniffed it. Got a little sniff right here, but yeah. So it wouldn't shock me at all if gold came up and real stiff. This thing could drop hard. But just looking at this, been using this indicator for a long time. Gold's got its work cut out for it. Gold has its work cut out for it. There we go. Back up to the side. Let me look at this daily one more time. And so we can see right up here about 2048 is the 9 log MA too. Yeah, everything's starting to flip around. You've got the 9 and 33 length log MA. Variance is rising. Log returns below the mean. Yeah, and you can see though, low length volatility is expanding. All right, low length volatility is expanding, positively correlated. The other two, expanding negative. That's why you got this big wick on the top side on this daily candle. That low length can surely push it up, but I'm telling you, man, it's going to get dragged right back down like it did. I'm not saying it can't go right back up. I'm looking for some correlation breaks, right? Going into tomorrow, you would have to come up, probably breach 2050 for the 981 intraday to correlation to break. So we'll have to keep an eye on that. Let me see here, old gold. Here's a problem too. So not only the cross, right? The top of the returns oscillator right here, pretty much top of the data set over here on the last couple bullish candles. The cross actually happened right here on the first bearish candle. This thing is setting up hidden bear, right? It already is on a few points. So be prepared. And the DLP is to the downside. All right, gold. We did you some justice. As long as Dixie is just dancing around sideways, gold's going to be doing the same thing too. If you see a dump in Dixie though, I'm telling you, gold will be right back up at that 1 SD to the top side. You see Dixie make that run to the top side, gold's going to dump out. Gold's going to dump out. Let's see here. Let's take a peek through these traditional markets real quick. Oil, you still rising. Jesus, gas jumped 40 cents or something overnight. What the hell? And in my brain, I'm at the pump. It's like $2.99 and I can't even figure out in my brain. So was the cheap unleaded like $3.39? Or was it $2? I couldn't even remember what gas was the previous day. Jesus. I didn't know if it went up or down. I was just like, oh, well, it doesn't matter, right? That's one thing. We get all caught up in the prices. Does it really matter? If you're going to drive your car, you got to pump it. You got to pump it in your tank, man. Can't really worry about the price. There we go. All right. I'm going to pop off gold. I do want to look at oil, but on the VRE, I'm always cheerleading oil to the downside. Let's look at oil, spot oil. Boy, it did dump out. Oh, that guy, that's silver. What are you doing, boy? There we go. Oil. Tell you what, oil's up above. Oil got up above its macro ranges. If it finds support up here, for Christ's sake. I got all excited back here. Go oil. Move to the downside. So you're at the top side of the weekly. Got 3 wicks into it right here. Intraday. Let me see here. Then you got the top of the monthly here. So right now, you can pretty much guarantee that the bull algos are going to be sitting at the top of the monthly. Bear algos are at the top of the weekly. Oil could get trapped in this little range here. 72 and a quarter. 73.2. Almost a point. About a point. Let's see where this closes today. I would like to see it close down below about 71.6. That would be good. I still don't like this. I really don't. I don't think oil's going to find legs. to be honest. Let me show you why. Let me show you why. First, I'm going to go to the 5-day. If you're looking at traditional markets, don't go to a weekly or a 7-day. If you want a good weekly read, go to a 5-day. Go to a 5-day and look at all the hidden bear on the 5-day on crude, man. This thing is not good. Not good. You have got so much hidden bear divergence. You're up here at higher highs all day long and a little bear div to kick it off, right? This little higher high right here. That's more than you think. There you go. Higher high right there. Yeah, it's not liking that Fisher either. Got some wicks through it, but now you're below the power mean band. You got the wave trend getting ready to break down through the 33 power mean. The blue dots right there, that's the 33 power mean within the power mean band. I have it highlighted because it needs to be highlighted. Trust me. Needs to be highlighted. Now, here's one thing though. Wouldn't be a bit surprised on this 5-day. I mean, could oil rip it up? 78. God, no, I'm going to take that back. I just don't think it's going to happen. Let me see the 3-day. Oof, can't get back up above the 9. And you got the 99 log MA flip before the others, right? The 99 log MA returns below the mean, variance rising. That is never good. Heading into a random walk too. Heading into a random walk. Let me see here. Yeah, look at all the hidden. Nice steady flow of hidden bear. Rejecting off the bottom side of the power mean band. Does not look good for oil, which I'm elated. Let me see here. Boom, boom. And you have got wave trend crossing down Fisher as we speak. I'm telling you, there are some things at the top side that definitely need attention. But if it does go up here, you would definitely take care of some of that hidden. But I just don't know if it's got the strength. I really don't. Don't know if it's got the strength to get that high. Let's look at the daily and down. Let's see what's happening intraday here. Yeah, so wave trend cross Fisher back here on 16th of November. Wow, been a minute, man. Been a minute. Didn't go up right away, but there's the wave trend test and the 99 log MA, and then it spilled out. Another wave trend test. I mean, to the dollar too that time. Looking real good. Not to the dollar, but pretty damn close. Yeah, this is very bearish. Oil's very, very, very bearish. A lot of fuckery going on with oil. I'm going to take a brain surgeon to realize that. Jesus, look at the 4-hour data set. Party time. As a low time frame volatility trader, starting a workflow out at a 4-hour, this is, oh my God, right? Woo, 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 woo. Lots of profit, lots of outliers, right? Lots of outliers. The lower we go, too. This just set up, or did set up hidden bear. But being above the wave trend, that helped. You can see it pulled back, went right down the wave trend, now up. Returns oscillator turned back up, DLP's up. Prediction model is to the top side. Starting to drop into trend. Volatility's falling off a cliff. That's interesting. The 90 minute. Yeah, bear div right now on the 90. I'd be a bit surprised to see this come back down, test the top side of the power mean band. 72.1. You have already crossed the zero mean. You can see what happened in this 90-minute candle, right? You'd pretty much just backfilled it. There's definitely some buy pressure, though. How do I know that? Well, we got a little volatility contraction negatively correlated going on here. 2400 too. 981 is the only one saying down. The other two are saying up. That 981, powerful, especially on a volatility tick like that. Boop, just popped. Guys, this isn't the easiest thing. You think reading lagging information is hard? Wait till you get to the leading information. That's why I have so much. And it all of it will come together. That's what's great about this stuff. All of us over here have used lagging information before. Man, I'm telling you. Once you flip the script, you'll never go back. You will never go back. You'll never look at any of that stuff again. And we teach this free. So if any guys watching on TradingView got time, hit the link on the Discord. Come in, join the community. Open a support ticket, request the free Volatility Starter Pack. You're going to get access to that, the educational channels that go along with it, the voice chat. You're also going to get access to our public chat where you can ask questions. Because if you're coming in and you're not asking questions, guys, you're going to get lost in this. This is not easy. Here's the 45 minutes setting up bear div too. But the DLP's building, right? DLP's building. See, instead of setting div, this returns oscillator though, man, steady stream of it too. Steady. Let's see. From the move when it, I mean, look at the returns oscillator. Right? Predominantly to the downside as price action just ripped to the top. This set up a ton of bear div. So this is why you use a workflow. Don't get stuck on one time frame. I'll tell you what, if you're using lagging information, I know people like to get stuck on the hour time frame, you know, the 4-hour time frame. Guys, do yourself a favor. You're not going to get a good read on one time frame. Using lagging information, you're not going to get good reads anyway, but give yourself a fighting chance. You come over to the VEPS and you figure out a workflow, it's going to tell you exactly what's going on. Remember what I said about the 4-hour and 90-minute? I was like, this could happen. Now I look at the 45 and I'm just like, heading back into a random walk. Let's see, low length volatility is expanding, positively correlated. The other two are expanding negative. More than likely, there's that 72.19. Same area. It's going to pull back. Yeah, man, it's looking like it more and more, especially all that bear div. The only thing holding back is that DLP. Let me see here. Yeah, there's more bear div. You're already below the zero mean. That's what I wanted to see. Yeah, guys, this oil's probably going to come down. Look at the bear div on the DLP too. When these two come together, right, look out. Going back into a random walk too. I'm waiting for the prediction model down here. All the volatility lengths are expanding. The low length's at a 92. It's negatively correlated. The only one that's expanding that's positive is the 981. 2400's expanding negative. Yeah, that's why we're seeing this come down. Where's the wave trend down here? 72.06. Where's that 72.33? Yep, 33 log MA is right at that 72. What is it? 72.17. I'm getting a lot of confluence right around. Let's round it up. 72.2 area. Getting a lot of confluence. And gold slipped a few more points too, I see. Let's see here. What are you doing, dollar? You take a little pop? Yeah, almost up to 102.6. And I'm telling you, man, dollar pops, you're going to see oil and gold go. Yeah, bear div from back here. I don't like that though. I will always use the crosses, right? If the top of a returns oscillator isn't the top of the data set, which this isn't even close, right? But what's that set up? When this is exactly when you see, look at this, 1, 2, 3. The next hour of 15-minute candles going up, and that was the peak of the returns oscillator. And during those 4 15-minute candles, the returns oscillator was doing what? Heading back to the zero mean. That is the mean of log returns. Look what happened as soon as it crossed. That was all bear div setting up. This is another thing that's great. You can't do this with lagging information like RSI. When you understand the returns oscillator, dude, look out. And so there, the bear div played out. As soon as it crossed, wow, you get this little pullback on oil. Right to the top of the power mean band, though. Let me see here. What's a wave trend? 72.29. I'm telling you, this log MA, this 9 log MA is going to try to keep this price action up. And you did. You got, and there was the test, pretty much close test of the wave trend as it crossed up Fisher way back here. I mean, that's what this was all about, right? If this would have been up above, you'd see it right there. But you had the top side of the power mean band, all right? Mean reversion. Wow. That's what mean reversion looks like. Doesn't matter what length. That's what we have, all these different lengths. You can usually see these wicks going right to power mean bands. Let me see here. Did we set up? No. Yeah, see the bottom side of the returns oscillator, there's no bull div. All the divs on the top side, which is bear. And if you are out there in trading land, you don't understand divergence, learn about it. Learn how to read it, right? Learn how to read it. Bull div is going to be on the top side of data sets and the top side of your oscillator. Bull div is going to be on the bottom side of the data sets and the bottom side of your oscillator. And when you understand higher lows, lower lows, all this stuff, it's going to come. It's going to take a while. It's confusing at first. Everybody remembers the first day that you were introduced to divergence. You were like, what? So be patient. Take your time. Join alpha trading. We'll get you on your path to volatility trading. So yeah, 15-minute. Yeah, that's pretty much what I see for oil. Let's see an RMLR though, right? I'm going to start on the 4-hour actually. Perfect. There it is right there. And what's that baby at to the downside? 70, 72. Yeah, a little lower. If that 72.2 area I was talking about gets cracked, probably going to see down here at the RMLR. And you're going to break the 33 power mean. So let's take that. 72.10. 72.1. Did I just say 72.10? I think I did. So 72.1. That's a 33 power mean on the 4-hour. Interesting. Let me see the 90-minute. Whammo. Ooh, you did. You're back up inside this 30-length RMLR. One down here, 71.44. Wow, it's a little deeper. It is climbing now. It's going to give you some nice. And right here, it looks like it's going to reject right off the power mean too. Oh, I love the future projection on this thing. You see here. Problem with non-continuous markets, though. Sometimes you can't trust these future projections. But we do have an override, right? Let me see. I'll look at a perfect tap on the 45. Came down to what? Second standard deviation. 45-minute time frame. 2SD. Beautiful. And you see these deviation levels get hit all the time. I mean, I can send you a chart and you can go back through these candles and just be like, what the hell? Why hasn't everybody told me about this yet? There's nobody out here teaching this stuff. You think the high-frequency trading firms want people to know how they're programming their algorithms? Hell no, they don't. Hell no, they don't. They keep it in-house. Sometimes makes me think we should have kept this in-house. But we want to teach people this stuff. That's why we do it for free, for God's sakes. Right? We're tired of seeing people getting just wrecked in these markets. There's no reason for it if you have leading information and you understand geometric Brownian motion. People can deny it all they want. I can show you an entropy indicator all day long, showing you how random these markets are. How random they are. Oh, there goes Big Dog. Tell you what, he looks like he's getting healthy. It's not limping. That's good. Sucks when you got a big-ass dog with a jacked-up leg. Okay, came down, tested the 11-length RMLR. Where's this 30? 33 power mean, 71.6. And that's what's holding this thing up. That's why you run a workflow with these RMLRs. It's giving you levels. All right, it's been 11 this 11-length RMLR. It's not lying. Mean revert, mean revert, mean revert. When's it going to break? If it breaks, you see 33-minute candle close inside here. Close. Right? Look, didn't close one there. Didn't close one there. This 45-minute candle has got what? 9 minutes left? See if this thing dump out and close below the RMLR. See if it can close below 72.73. If it does, man. 33 power mean, 71.6, and you got the 30-length RMLR down here at about 71.15. Let me see the 15-minute. Probably up above. Yeah. Caught in the scissor game, my friends. Where's the 33 power mean? Right now, in this current 15-minute candle, it is right on top of the 3SD, 72.27. 72.78 is, wait a minute here. Yeah, no, that 33 power means at what? 72.28. Then you got the 30-length RMLR up there at 72.78. Yeah, you break these RMLRs. Here's a good look here. Yeah, look at these 15-minute wicks right into these distribution levels. Top side, downside. And we throw volatility bands around everything. I got them real light because there's enough noise on here. All right. I mean, I've had some wild comments about these charts. Oh, you guys are trading star charts. If you only realize what you were looking at. That's why we teach this stuff for free. And you can come into the chat and ask questions about the indicators we have in our paid package. right? Which is very inexpensive. Lay off the Starbucks latte, only get like 3 a week, and you can afford our freaking indicator pack. Just believe, what is it, 99 a month? You get a 6-month or 12-month deal, dude. It drops off tremendously. Tremendously. We say this time after time again. We're not trying to extract money from our communities. That's why we give a free chart. Guys, the free volatility starter pack, you learn that, focus on it, you can trade with that thing. We tell people that every day. You want to take this to another level and become a professional trader? Our indicator package. There's over 40 indicators for you to build an edge with, right? But the most important part, in our opinion, that goes into an edge is risk management. And nobody out there, all these YouTubers, nobody is teaching the correct risk management. And you know who's in the back laughing? You ever seen that meme where all the elite are standing around drinking, laughing, right? That's the HFT firms. They're getting a kick out of all this. The push of traditional TA lagging indicators onto the masses, right? That's one of the biggest things. People not understanding true market dynamics. That's the biggest problem. They're getting a kick out of it too, man. They're getting a kick out of it. And there's a reason why there's nobody else out teaching this stuff, because a lot of people don't even know about it. A lot of people don't even know about it. You've heard some of these terms before, but nobody thought you could take entropy and use it in trading, right? Nobody, and I mean nobody, has got a reverse mean of log returns, right? The guy behind all this, the engineer, makes me feel stupid. I just fly the stealth fighter. I don't engineer it. But yeah, we got a couple really good coders and math guys, so we are squared away at Alpha Trading. All right, oil, do your thing. Dixie finally broke 102.5. Okay, I'm going to go down there in a 15-minute. Let me look at this 4-hour one more time. Boy, this thing is in no man's land. Sent a wick right through. This 4-hour, man. Dixie. Let's see in the next hour if you can close above 102.6. If you do, we got a new target. There's that, and then it's that 103 area. And if it runs up there, look out, man. Look out. Traditional markets. Let's see if anybody's getting run through here. Boy, we got some cold weather coming our way. Below zero and shit. What the hell? There goes Lyft. Where you at? 12.9? Everybody knows what I think about Lyft. You ever see Lyft dip below $10? Open up that brokerage account. Start looking at selling some puts. Why would you sell a put? God, look at NVIDIA. Gotta love it. But yeah, when do you sell puts? Do you sell puts in a bear market? No, you sell puts in a bull market, right? Good options traders know options are made to sell. But also good options traders know you have to have a big account to sell premium. There's a lot of brokerages that won't even let you sell premium until you prove yourself to understand risk management. Because when it comes to options, well, you better understand risk management. You will get wrecked. And I mean wrecked. It's the thing nightmares are made out of. You get that email, man. Crazy. Literally, people have jumped out of fucking 30-story buildings before because of it. So look out. Don't wreck yourself. Why? You're emotionally attached. Guys, and you're swing trading. My God. Yeah. Get wrecked is right. Oh, Zen-Tap must be in here. Yields pulling back, huh? Nah, kind of the 10 years flat, but it got back up above 4%, so look out. Uber. Got a friend who just started Ubering. Out in Lake Tahoe. Blizzard yesterday. Gets a call. I got to take a chick to North Shore. He gets there. If you know Tahoe, you know exactly what I'm talking about. So he goes up West Shore. Gets right as he's pulling through Emerald Bay. Forest Service is right there shutting the gate. Emerald Bay Road is closed. So yeah, that was fun. He's like, oh, I'm not minding it. I'm like, yeah, don't lie to me, buddy. He's taking over Uber in Lake Tahoe. Good for him, man. Somebody had to do it. I mean, he's pretty much retired. He's just bored shitless. So There you go. Got back up above 33 power mean here. Telling you, man. The dollar closes this 4-hour candle above 102.6. You might see a quick little pullback on the next 4 hour. You can see the dip the RMLR is going to take. And that'd be about 102 points, pretty much right where it's at right now. So if you close above 102.6, you could see a quick pullback, maybe 0.4, 0.5, and then you could launch. I'm not saying the dollar is going to be at 103 today. I'm saying this is a good target, right? And if it does, this thing could go sideways and mean revert. Don't forget about that. That's what makes the RMLR powerful as well. Mean reversion doesn't mean that thing's going to just dump or pump immediately. It can go sideways and mean revert. Let me see on the 90. Boy, putting in some work right here. Again, even on the 90-minute, look how close it is to that 102.6. It would be best to close above the 102.6, but just closing above 102.593. It's really close, but that's going to get you back up above the RMLR here too. Got a nice bounce off the 33 power mean. That is the 30. But I look at these intraday RMLRs. This thing could get trapped in a range, man. This thing could get trapped in a little bit of a range. Dollar's looking good, though. Dollar is looking good. All right, boys and girls, let me see anything else in here.
So the 4-hour mean reversion on Bitcoin is spectacular.
Bro.
For the RMLR. So nice.
Very nice. I do believe we've already talked about it.
I know I wasn't here, but yeah.
No, you know me, man. Yeah. Tell you what, Bitcoin on a mission, man. Oh no, we're setting up another cup and temple. Hilarious. Here's a this back here. This is where the whole cup and temple thing came from. Just laughing about it, right? We do not trade. We do not trade patterns. Even look for them. But when I saw that, and this is what I'm talking about. Look at the big pump. This thing mean reverted, pretty much a little bit down, mean reverted sideways, ran that 4-hour wick right up to the first standard deviation, and then dumped it out. Where to? 99.7 Laplace distribution range, then pulled back right up to the 3SD, then really dumped it out. Not one candle closed below that RMLR. And then what's it do again? It mean reverts back up, right, to the RMLR, dumps it back out again, finds support on the 33 power mean. Look at this. Didn't close a candle below that 33 power mean until right there. And then you get a quick another dump out. And then the run, sideways mean revert. I mean, so on and so forth. These indicators are very powerful. Let's see what's sold at 105. BTC 40.
It's delicious.
Pretty much. Go back over to crypto. Of course, shorts picking up now. This is my canary in the coal mine. Canary in the coal mine. You got some longs, took some profit. 836 Bitcoins taken off the books. So the longs on Bitfinex, 1.21%. You got 26 shorts piling on at Bitfinex, up 9%. You're right. I mean, here, let me pop this on real quick. You guys saw where oil was. Oil was just sitting there getting hammered by the top of that weekly volatility range. Let's see where this wick just went to. Right up to is that the first resistance, second resistance on the weekly? Let's see here. Yeah, second. Let me take a peek. Where is the first? Or is that the first? God, it is the first. Boy, if it is, this thing's got some room to run. Now, there's one snuck in there somewhere. Let me see. Where are you? One of these other levels is right on top of it. Where are you, little booger? There it is. It's right there. 46,443. That is the second. Second resistance. All right, first resistance. There's the second. Top side of the weekly this week, 51.8. 51.8. Can BTC do that? Sure it can. But here's an issue. What did it already just hit? You see that wick? Not only did it go into the second resistance level, you know what that white cross line is right there? That's the 95.4% Laplace distribution range. That didn't mean at the beginning of the day there was a 95.4% chance that was going to go up there. That means there's a 95.4% chance during this daily candle Bitcoin's not going to close above that level, right? 48.925. Now you're right back at the top side of the 1SD. First standard deviation, normal distribution. Is it going to support it? If it doesn't, you're going to be right back at the top side of the 68.3 at 47.168. But you got to wait till the candle closes. Got to wait till the candle closes. Good run on BTC though. 95.4 Laplace. Nice, man.
Yeah, I mean, that was like,
And
whether it's on the 4 hour or the daily or the whatever time frame, it just constantly is nailing them. I just see on these charts, folks.
Look at all the resistance there. And during this 4-hour candle that closes in literally about 54 minutes, that's the 99.7 Laplace distribution range on the 4-hour candle. That's the white line. The third standard deviation normal distribution on the 4-hour. The 95.4 Laplace on the daily, and the second resistance level on the weekly. So when you get a wick up into this area, would that have been a good insta short? In my opinion, 100%. I'll show you why. I don't even have to look at the chart. I bet it's set up. So let me put this on BTC. I can just tell by the reaction of the data set. All right, let me go down here. It's going to be on these low time frames. Where are you, bugger?
Yeah,
there was the top on the 9. There was the bear div that set in on the 9 minute. You see the 6 minute. This is why you trade low time frame volatility. How did you know this is going to pull back? So right when the returns oscillator got to this local high right here, where was Bitcoin's data set? It was at all that freaking resistance. And when you understand what those 4 different levels are, you're like, yeah, bear div, and you're sending a wick into this. And where did the wick go to the dollar? 99.7 Laplace on the 4-hour. And then whap, pull back. How many hundreds of dollars? I mean, almost 49K. Guy, almost $1,000 quick pullback. Zip. What a great scalp. Just understanding the VEPS. Just understanding the VEPS and using a little low time frame workflow. There wasn't any div on the 15. All right, so I'm digging. I'm like, okay, not there, not there. I see the data set approaching all that resistance. So I'm going to go down through these time frames. Whoop, red alert, right at the top. Lower low on the 9. Lower low on the 6. Let's see the 3 minute. Yeah, man. 3 minute too. Bam. And now here's when you know where to get the entry, right? So if you're down here on the 3 minute and you see this bear div set up, you see the returns oscillator dropping as the data set on every 3 minute candle still going to the top. You know where that resistance is at. What are you waiting for? You're waiting for the 3 minute to cross a zero mean. Then you're jumping all hands on deck. You're getting in that short and you're taking your profit. Where are you taking your profit? Probably 1 minute wave trend. All right, what was that at? So you would have got about an $800, $750 move, even the 33 power mean. But if you're just going to use the VRE, right, and you see that, you know that monthly right there is not going to hold that. All that div and rejection off of those 4 powerful little levels right there. So you're looking at, there's the first resistance level on the daily. You're looking at the first standard deviation. If I was, I would have probably been looking for that. I would have front run the first standard deviation